All right, so there's already a couple of BlackBird workshop videos out there. They're a couple of years old, using the SuperTrend, and how do you place a position while the SuperTrend, is in the opposite state. So like right now, you can only take long trades if you're using the SuperTrend. Right? So how do you take a short trade, when the SuperTrend is in a long state? Right, so there's already a couple of videos out there that show you how to deal with that situation. And you would use, a fixed stop loss. Yeah, so in the initial placement settings, the way the older videos talk about how you handle this is in the initial placement, you just have to put some kind of a fixed stop loss to start with. And then you can use trailing rules to determine if it's safe to move your stop loss to the SuperTrend, right? Once the SuperTrend has reversed and matches the trade direction, you can use the trailing rules to check, where the SuperTrend is in relationship to the market, right? All right, so the added twist to this is alternatively using a swing high or low, right? So that's the added little twist to this question. So, okay, with that, let's get going here. Let's open this up. All right. So I'm just going to use a market entry because this question only deals with setting up a stop loss here. Oh, let's see. So what do I want to start with? Yeah, I guess I'll just build this from scratch here. So, sometimes I'll start by using the parabolic SAR trailing because it sets the stop loss up with using an indicator, and then you can just replace the parabolic SAR with your SuperTrend, but then you still have to go in and still add some stuff and whatnot. So, but this time I think I'll just start from scratch. So let's just start with a tick-based stop loss, right? And so the reason why is we're going to start right with this by this option here, using a fixed 20 tick stop, right? So so currently, right now you have to set up some kind of initial placement price, right? So you have to start with something. So, tell BlackBird, initially, place my stop loss here. So, and of course, if you're using an indicator like the SuperTrend, there's always that problem that the SuperTrend could be on the wrong side of the market, right? So, so if you are using some kind of indicator, for your stop loss, you always have to make sure, is it possible that your indicator could be on the wrong side of the market? And so if that is possible, then your initial placement is going to have to be some kind of fixed offset, right? So you could either use, just a tick offset or use an ATR based offset, whatever you want, but you're just going to have to hard code some kind of a standard, offset distance, right? And so here, let's knock this down to 20 ticks, right? So we're just going to start with a standard 20 tick offset, right? And that's guaranteed to work every single time, right? So you take the entry price and you subtract 20 ticks. So that's always a working price, as compared to using indicators where sometimes the indicator price, isn't a valid price for a stop. So even the swing, which I don't have that indicator, so let me put that indicator on here. But sometimes, sometimes there may not be a swing low to place your stop loss at, right? Even a swing low could be at the could be on the wrong side of the market, right? So that's not even a guarantee either. So you run into the, right? So using swing points, you run into the same problem as using the SuperTrend. So, but let me, oh, there we go. Let's close that out and let's get the swing indicator on here. Let's see. So I'm going to use the the one that comes with the shark tools here. Let's put on the swing highs and lows. Yeah, we'll just use the, actually, let's see here. Let's knock that down to number of swings 2. All right. So like right now, actually, yeah, right now, price is in between the swing high and swing low. So you could take a long trade or a short trade. But there are situations, like right in here. There we go. Right in here, right? Price is above the swing high, so you couldn't take a short trade. And right, so if you did take a short trade, you couldn't rely on using the swing high, right, for a short trade. So, all right. So you're always going to have to default back to a fixed offset distance, either tick based or ATR based offset there. All right, and then next we're going to go into the trailing actions, and then the trailing actions can handle moving the stop loss to either the SuperTrend or the swing high, swing low, right? Depending. So, right, we can set up a bunch of trigger rules here, that are going to verify that either the SuperTrend or the swing high low, is on the right side of the market, before moving the stop loss there. So I guess, yeah, let's build the trailing rule for this swing point, right? The swing high or low. So, all right. There we go. Okay, so we have a name for this. And next, what we're going to do is we're going to compare price. Basically we're going to compare the market to the indicator, right? And this would be the swing indicator in this case. So, all right. So for input A, that's on the closing price. So let's switch that over to the last price, right? So that's where the market's at. If you wanted to, you could use the close of the bar, right? So basically, if you use the close of the bar, then then these trailing rules are going to wait for a bar to close, on the right side of the swing indicator or the SuperTrend. But if you want this to take place in more real time, while a bar is building, so it happens a little faster, then we could use the last price, so either one works. It depends on whether you need your, if you need your stop loss to move the SuperTrend ASAP, or wait for the bar to close. Right. So this is going to be, using the last price is going to be more liberal, whereas using the closed price is going to be more conservative. So, all right, so I'll put it on the last price there. And then input B, well, that is going to be our swing indicator. So let's open up the indicator list here, and we'll go to Shark Indicators, and there's the swing high and low indicator right there. All right, and we need to remember adjust the number of swings here, because the swing indicator on the chart, right, I knocked the number of swings down to 2, so it'll react a little quicker. So, all right. So now we need to figure out what plots are we using for what. So let's see. For a long trade, we want the widest bottom. Yeah. And so for a short trade, we want the opposite. We'd want the swing high, which would be the widest tops. So widest bottoms is going to be the swing low. Widest tops is going to be the swing high. All right. And also, let's see. No, we're good. All right, so we have our indicator set up. And you're probably going to want a little buffer, right? Like, would you really want your stop loss to move up to the swing point as soon as the market moves one tick above it, right? Probably not. You probably want a buffer between the swing point, right, and where the market is before your stop loss moves up. So let's give this like a 10-point buffer, or I'm sorry, 10 tick buffer between the swing point, and where the last price has to move to before the stop loss moves up. So, all right, 10 points. And so now we need to figure out what mode. Do we want A to be greater than B or A to be less than B? And so for a long trade, yeah, we want the last price to be greater than the swing low. So A equal or above B. Yeah, that's fine. So the default modes here are fine. And so now that we have that set up, now we need to go into the action and tell BlackBird, where to actually move the stop loss. So we're going to go into Move To, open up this menu, and we don't want to move our stop loss to the last price, right? That'll get the stop filled basically immediately. So we want to move that stop loss to an indicator, right? We want to move it to the swing indicator. So let's open up the indicators list, go into the shark indicators, swing highs and lows, right? There's our swing highs and lows again. And again, knock down the number of swings down to 2. So that way it matches what we have on the chart here. Then also pick the correct plots, like so. So we're using the widest bottoms or the swing lows for a long trade, and then the opposite, right, for a short trade. Okay, there we go. And of course, if you wanted to, you could always, move that stop loss like a tick below the swing low, maybe 1 or 2 ticks below the swing low. If you wanted some kind of a minor offset, you could always do that. So, all right. Let's see. Yeah, so there we go. Let's see. So using the swing, higher low, right, is basically an alternative. It's, looking at the way this is written, it looks like it's a one-time alternative, if the super trend is on the wrong side of the market, right? So the way I interpret that is we don't want this rule to repeat. So in other words, we don't want the stop loss to trail the swing lows higher, right? So the stop loss might move to the swing low one time, and then after that, it won't do that anymore. So, I'm thinking that we're also going to need another trigger here, but I'll come back to this here. So what I'm thinking, in looking at what the market just did here, I kind of realized that, so let's say we wanted to take a long trade here while the super trend, right, is in a downtrend, but we wanted to take a long trade. Let's see if I can find an example. Yeah, all right. Here's an example. So, oops, wrong object. There we go. So on these two bars, right, so let's say we went long here, right? We went long somewhere along here where it's flat. So the super trend is on the wrong side of the market. The swing low is above the market. Right, so we can't use either the swing or the super trend. But then eventually, shoot, this is not a perfect setup. So we're going to have to ignore that part of the swing low. Right, so ignore those 3 bars for the swing low there. We'll have to pretend like those didn't plot. Right, so we're in a long trade. And then, eventually our super trend reverses and we also get a swing low. Right, so how do we know which indicator the stop loss is going to move to? Right, so let's just put our little stop loss down there. Right, so we have our stop loss down here, 20 ticks, whatever, and then our swing reverses, right? But we also get a swing low, or I'm sorry, it's super trend, flips, and we get a swing low there. So how do we know, right, which of these indicators our stop loss is going to move to, right? Now the swing points is only supposed to be like an alternative if the super trend, is still not in the right position, right? But here we have both the swing point and the super trend. Now the way BlackBird's trailing rules are designed, it's designed to always tighten your stop loss. Right? It's always designed to move your stop loss as close to where the market's at, any time. So when BlackBird sees, oh, I can now move my stop loss to the super trend. Oh, and the swing point is there as well. So I could move my stop loss to either one of these indicators. And so then BlackBird's going to say, okay, which one of these indicators is closer to the market, right? So it's got a choice, right? So BlackBird's going to go, okay, my super trend is down here, but my swing plot is higher. So the swing is closer to price. So it's going to move the stop loss to the swing point, right? To the swing low there. But that's, but I don't think that's the intent of this, right? The intent is if the super trend is in a valid spot, then move to the super trend. Right? So we need to find a way to prevent BlackBird from using the swing low, if the super trend if the super trend is on the right side of the market. Right. So, yeah, that kind of situation is kind of what caught my eye earlier. And so I think, so in order to address this situation here, we're going to have to come back to the trigger, the trigger here, and add another, trigger event. To prevent the stop loss. Well, basically, what we're doing is we want to prevent this trailing roll from ever executing, right? Because remember, this trailing roll moves the stop loss to the swing low, right, or to the swing point. But if the super trend is also on the right side of the market, right, then we don't want to move the stop loss to the swing point. So, all right, so we'll get back to that in a moment here, but let's move on and make the trailing roll, to follow the super trend there, right? Okay, and also just to make it clear, we're using the SuperTrend M11 there. All right, so for the SuperTrend, we have to do the same thing. We have to, compare the market to the indicator, right? Just as we did before. So we're going to do the same thing for the SuperTrend trailing rule here. So we want to use price versus indicator. And so once again, input A, we'll switch that over, to the last price, like so. And then input B, that will be our SuperTrend indicator. So it's going to the lizard indicators folder. All right, scroll down. There's our M11. And I'm just using the default settings here. But, remember, adjust any of your settings, if you're using, custom settings on your chart. And now, as far as the plots, we can just use the stop dots. That works just fine. So, and also we probably want, that 10 tick offset, right? So we're going to take the SuperTrend price and then add a positive 10 ticks to it, right? So that way the last price has to be 10 ticks above the SuperTrend before the stop loss will move to the SuperTrend, right? And the long mode, the default settings, are is what we want, right? We want A to equal or be above B, right? So we want the last price to be equal or above B, and of course the equal part is going to be the SuperTrend plus 10 ticks. So, okay. So there's the trigger, right? So that's the trigger that verifies, right, that the market is on the correct side of the SuperTrend indicator. So, and now the action, right, is, well, we're going to move our stop loss to the SuperTrend indicator. So let's open this up. Go into the lizard indicators folder, and there's the SuperTrend. And again, we're just going to use the stop dots like so. There we go. Now the repeat, we do want the repeat set to indefinitely, right? That way our stop loss will keep following the SuperTrend, as long as the market allows, right? So there we go. All right, and so getting back to our, our swing high-low trailing rule here. Let's see. So we're going to have to use the Advanced tab. All right, and let's see. Yeah. So what we're going to do is we're going to do another comparison, right? So basically this price versus indicator, it's doing a comparison, right? Very, very similar to the comparison solver in Bloodhound, right? You're comparing input A to input B and then checking, and then saying I need A above B, or I need A below B, or I need A equal to B, whatever it is, right? So it's basically doing the same type of comparison as the comparison solver in Bloodhound, right? So we're going to do another type of comparison. We're going to compare the SuperTrend to the swing, right? So if the swing low is above the SuperTrend, then we don't want this rule to happen, right? We only want this rule to fire off if the swing low is below the swing. Yeah. So if the swing low is below the super trend, right, then what's going to happen is BlackBird's going to say, okay, yeah, I can move my stop loss to the swing low now, but I can also move my stop loss to the super trend. And then BlackBird says, okay, which one of these indicators is closer to the market? And so if the swing low is below the super trend, then the super trend is closer. So then BlackBird is going to pick the super trend. So yeah, so that's why we're going to add another price versus indicator. And if the swing low is below, let's see here. Yeah, if the swing low is below the super trend, then that effectively, it's kind of like a double negative. Yeah, it's like a double negative. So we're building a double negative in here. All right, so if the swing low is below the super trend, then both the triggers will execute, but also, wait, actually, yeah, this works. Yeah, sorry. Yeah, I was just thinking for a moment that maybe this wouldn't work. Yeah, this will work because let's say our super trend is, it's up here, right? Right, the red super trend is above the swing low, so the swing low is below the super trend, and so that would allow our stop loss to move up to the swing low when the super trend is on the wrong side of the market, right? So we'll do some testing here afterwards, but I think in theory, yeah, this should all work out. So let's go and add another price versus indicator there. And so this time input A is going to be the super trend indicator. So let's switch the mode to indicator value. And so now we can go and select our super trend indicator. There it is, the super trend M11. And again, the stop dots are already selected. We don't need to change any settings, so we're good there. And then input B, that's going to be the swing low. So let's go open up the indicators list here, open up the Shark Indicators folder, and there's our swing highs and lows indicator. All right, again, knock the number of swings down to 2, and then pick the plots that we're using here. So again, we're using the widest bottoms, which is the swing lows for longs, right? And then the opposite for shorts. Okay, yeah. And so if we're in a long trade, well, I think I put these in backwards. Yeah, we want the super trend. Oh, no, I'm sorry. Yeah, we want the super trend below. I'm sorry, we want the super trend above. We want the swing point below. So, yeah, so I need to reverse these. Wait, no, this is correct. Yeah, we want the super trend above the swing low. So A is above B, sorry. All right, so this should be correct. And, all right, so I think we have it. Or at least we have a first draft here that we can now go and test out. All right, let's click OK. And well, we both have a swing low and a super trend. So let's just see what's going to happen here. And, I don't see my trade flags. Let's see how my stop loss got filled immediately. Let's see. Yeah, let me turn on my plots here so I can see what happened. Let's see. Oh yeah, that doesn't help because I'm using this delayed data feed. Shucks. Okay. All right, let me disconnect this delayed data feed here. That way I can control where the market goes. All right, so let's disconnect the live data feed and connect the simulated. There we go. All right, and let's enable this. So, okay. So let's go long. And you know what? That's not enough of an offset. All right. Yeah, I'm going to over exaggerate our initial placement here. So that way we can actually see some movement. Let's try 50 ticks. There. All right, let's go long. And bingo, you can see the stop loss moved up to the swing low. Let's try that one more time. Boom, boom. So there we go. So our stop loss moved up to the swing low. And let's see, let's move the market up. Let's just move the market up. And so the market's going to cross the super trend here as soon as this bar closes. And then our stop loss will start trailing the super trend. All right, so we need one more bar to close. We're almost there. Oh, actually, yeah, that's right. Forgot about that. Yeah, you know what? So yeah, because we're using the SuperTrend indicator, yeah, we're gonna have to use we're gonna have to wait for the bar to close. So we're gonna have to use the closing price of the bar. Yeah, to activate these rules here. Shucks. All right, let me see if I can pull the market down because I don't want this bar to close. Gosh dang it. Just ignored the trend slider. Oh well. Okay, so let me go in here before we go any further and let me edit my triggers here. Yeah, so instead of using the last price, let's go back to using the close price. Here. And let's see, that doesn't use, yeah, that doesn't use the price. The super trend, there we go. Well, might we? Yeah, we could actually have the same problem with the swing indicator as well. So, all right, yeah. Okay, so we switched the last price to the close. And yeah, okay. That should do it. Oh, no, one more thing. Right. One more thing. Wait, no, let's close this. Oh. There we go. That's what I think I'm missing is the displacement here. So so the reason why I put this displacement in here, gee whiz, I haven't worked with the super trend such a long time here. Trying to remember here. So here's the other issue here, right? Is we can't see this. Yeah, let's close this out. Right. So when a bar crosses the super trend, right, the close is above the super trend, right? But we don't want to use the super trend, for a downtrend, right? We want to use the super trend for a long trend. So we want our stop down here, not our stop up here. Yeah, so I'm just trying to remember how we've always done that. And, oh, okay. Yeah, so I think the way we've done that is I must be using, bars a go. 1 bar a go. Yeah. All right, let me test that out. See if that was the key there. Let's see here. All right, so the super trend's in an uptrend now. So let's go short. And I'm going to drive the market down. There we go. Now, we do have a swing high here, right? So as soon as a bar closes, 10 ticks away from the swing high, then our stop loss is going to move down to the swing high. And there we go. All right, our stop loss just moved to the swing high. Great. And so now we're just waiting for the market to cross the super trend. Has anybody ever seen the NQ move this slow? I haven't. Yeah, that'd be nice if NinjaTrader enhances their little trend slider here a little bit. Makes it, add a few more steps to it so you can move the market a little bit faster. Okay, there we go. So, right, the close, was below the super trend, but it hasn't moved yet. Well, we also need the close to be 10 ticks away. So, yeah. Oh, and yeah, actually, yeah. So it hasn't moved yet. It still hasn't moved. It hasn't moved down, right, to the long plot for the super trend, right? So the super trend is way up here right now. So that stop loss is just going to sit there on the swing high until the super trend moves down. So we'll get it to move down here shortly. All right, we're almost there. 1 more bar, and then our stop loss will move down to wherever the super trend goes. Yeah, down there somewhere. There we go. All right. So now I need to create that, see if I can create that situation where, where the super trend is below the swing low. Let's see. Oh, actually, I think I have it right now. Let's see. Let's try this out. Go short. Oh, no. All right. To test this out, I think I'm going to have to really push that stop loss way out there. Let's see. No, okay, that's only about 40 ticks. Not quite 50. Yeah, maybe 45 ticks. All right. So, well, actually, no, that's... this is not the situation we want. I want this situation where, where the swing is closer to the market. I don't think I'm going to be able to create the situation that I want. Yeah, it's a tough one. Well, maybe. Okay, so if this swing low, if it actually steps up and identifies this as a swing low, then I might get the situation I'm looking for here. All right, so we have the swing point, I'm sorry, the SuperTrend started. Hopefully that will get identified as a swing low. I don't think it will, though. Darn it. Yeah, I need the SuperTrend to stay below that low point. Let's see if it happens. All right, it's staying below, but yeah, problem is this is not going to be detected as a low point. Yeah, all right. I don't think I'm going to be able to create this situation here. Let's see what the actual market has for us. Oh, look at that. Okay. We are in... shoot, I missed it by 1 bar. Darn it. So close. All right. Well, maybe I can get into a long trade here. There we go. We have a swing low. And let's see where the swing point goes. I'm sorry, where the SuperTrend goes. Well, shoot. I got that trade in a little too late. So, I mean, I had 1 bar with the correct scenario. There we go. Let's try this again. Bingo. It worked. So we have a swing low above the SuperTrend, but still the stop loss moved to the SuperTrend, which was further away from where the market is than the swing low, right? The swing low is closer to the market, right? And the default behavior is for BlackBird to move your stop loss to, whichever indicator is closer to the market. So there we go. So it's working. All right, good. That worked out. And we were able to test it. So, okay, so let's kind of look back here and kind of recap how we, addressed this problem where the swing point could be closer to the market than your SuperTrend, right? But the SuperTrend is what you want your stop loss to trail, right? The swing point is only supposed to be used temporarily, in place of, your initial 20 tick, place set there. So put that back. Yeah. So the key to getting this working here was, right, so for our swing low or swing high, trailing rule here, we had to put in 2 triggers. So let's open this up, right? So we have one of the, price versus indicator, comparison triggers where we're comparing the close to the swing indicator, right? So that way, we make sure that the swing low is on the right side of the market, but at the same time, to prevent the stop loss moving to the swing low, because it might be closer to where the market is, right? It might be closer to the market than the SuperTrend, right? So right now the SuperTrend is closer to the market than the swing low, so there's no problem there. But further back, right, the swing low was actually closer to the market than the SuperTrend. So to prevent, this trailing roll, or to prevent this trailing roll from moving the stop loss to the swing low because it's closer, we added this second price versus indicator trigger here, and we're making sure that the SuperTrend is above the swing low, or the SuperTrend is below the swing high. All right, so that was the key there, the key piece to getting this working correctly. Yeah. All right, so let me save this out because this is kind of unique here. This is kind of like a compounding trailing stop loss here. So all right, let's hit the save button. All right, I think that name will work. All right, so our stop loss is initially set at 20 ticks, or if the swing low is a little closer, it'll move there. And then, right, and then we want it to start trailing the SuperTrend as soon as possible. So, all right, so we'll save that out, and let's see, that date is all correct. So, okay. All right, well, there we go. That was our emailed in question there.